In this video, we are going to break down IV gap calendar spirit strategy, which was originally discussed by Tanmay in a conversation with Crow. And you can also go and check this video out. He has explained it beautifully. But this strategy is more of a reference model rather than an entire logic that you can get started with trading tomorrow. It's a very interesting concept, and we are going to understand the logic of this strategy, and we are going to build and backtest it using build algos. So let's get started. So let's first understand the logic behind the system. So here what we have to do initially is we have to calculate the IV gap between the current week expiry and the next week expiry. And this is how we have to calculate it. So we have to take the next week expiry's IV of the ATM, call or put, whatever you find helpful, and then we have to subtract it with the current week expiry, then divide the entire equation with the current week expiry and multiply it by 100. So you get a percentage value. So as per the video, if this percentage value is above 15, then we have to see which expiry has higher IV. So whichever expiry has higher IV, we have to short the straddle of that expiry, and then we have to buy the straddle of the other expiry. So let's say if current week IV of current week expiry is less than the next week expiry, then we create a short calendar because the next week expiry has higher IV. Similarly, if the current week expiry has higher IV, then we short the straddle of this expiry, and then we long the straddle of the next expiry. That creates a long calendar. So that is the basic example of creating long calendar and short calendar. I slightly made a typo over there, but yeah, this is the entire entry condition. So once you have entered any of this position, there are three exit conditions that we have to look for. So first exit condition is that exit should be on days to expiry 1. So if it is DTE 1 at 15:15, we'll close the position. We won't carry the position to the expiry. Second rule is if IV goes below 10%, then we'll exit. So in the video, Tanmay had said that the IV should flatten, but we don't have any quantified way of finding a flattened IV at the moment. So we are just going to say if IV goes below 10%, then we'll exit the position. Then there is third exit condition, which was we should exit if the max profit, 30-40% of the max profit is reached. So to calculate max profit of a calendar spread, we have to make an assumption of the next week expiry, like the price of next week expiry will be at the time of 0 DTE of the current expiry. So that we have to assume, and right now we are not going to get into the details of that. Probably in the next video I'll show you how to do it. For that we'll need to use the code mode. So we'll discuss it later on, but at the moment we'll just consider if there is a profit of 3.5k, then we'll close down the position. And there's one thing that I missed out in the entry condition. So the entry should be between 3 to 6 DTE. So you can also test out with different DTE values as per your requirement. And this is the base logic. We are just going to build on top of it at the moment. And if you want to add any different conditions to it, you are open to do it, as the builder file that we create after building the strategy will be open to you. So you can anyways go and edit whatever logic or add any new components if you like. So let's get started with building the strategy. So to build the strategy, we are going to go to buildalgos.com and we are going to open the strategy builder. So I'll click on launch strategy builder, and this is a basic template that gets opened up. It is of 930 straddle. But over here we are just going to use this template. Over here we are just going to modify select symbol as Nifty, and we are going to change the time frame to 1 minute, and this position type we are going to change it to positional. Once this is done, in the data point section we are going to add ATM call of current week. So you can see it's selected by default, and we are going to make a copy of it and just going to change the expiry to next. So we have added current week expiry and the next week expiry. So we'll click on copy. So once these 2 points are added, we are now going to create the first entry condition, which is we are going to find the IV gap. It should be above 50%. So to find IV gap, we'll go into this math equation and click on this calculator icon and open the bracket. Then we have to add ATM call, select the column of IV and current IV minus we have to add the current week options. Yeah. So what we have done here is that we have selected ATM call of week 1 and if we have then selected its IV minus the current week expiry is IV. We'll close this bracket and divide it by the current week IV. So current, select column as IV and add. So once this is done, we have to just multiply it by 100. So I'll add number here, number will be 100. Here instead of any, we have to click on absolute. So it gives an absolute number of the value, so which will be easier for us to compare, and click on done. So we have done this first step if it is above the value of 15. So once this is above 15, and then we are going to compare the two expiries. So for first step, we are going to check this condition and then we are going to create a short straddle. So for this, we'll add the data point of ATM CE, IV of current, and if it is less than the IV of next expiry. So if it is below IV of next expiry. So if this is the case, then we have to create a short calendar. But wait, there's another condition which is with respect to days to expiry. So for that, in data points, I'll click on add and select days to expiry. And in days to expiry, I'll just click on add. And here you have to say DTE expiry should be above or equal to 3. So it will only enter into this type of a position if the days to expiry is above or equal to 3. If you want, you can also test it out with DTE being 2 or whatever you feel is correct. So for now, we are just going to select it to 3. So as per build algos, this is days to expiry is the number of trading days. I'm not sure what Tanmay has considered. At least in the platform, it is just the trading days that we count. So once this is selected, we are going to click on, we are going to modify this heading actually and name it into short calendar. So we have a short calendar here. Now we are going to create a short calendar action. So as we can remember, short calendar is selling of the next week expiry straddle. As you can see here, we have written the condition that current week IV is below. So obviously next week IV is more than current week IV. So what we're going to do is we're just gonna multiply this. We're just going to create a short position of the next week expiry. And we are going to buy the current week expiry. So I'll just say add new position here and we'll buy the current week expiry. So 75 quantity ATM call is selected and we'll add ATM put. So I'll just move the buy legs at the top. So this is at the first position now, and even this leg 4 will add into the first position. So we have ATM call and ATM put that we are going to buy, and we are going to short the next week expiry. So here I'll name it as short calendar. Okay. Now once this is done, we are going to save it. And here we are going to make a copy of this action and name it as long calendar. Okay, calendar. Yeah, so similarly, we are also going to make the copy of this action and we are going to name it as long calendar condition. So here we go. So we have short calendar condition created and long calendar condition created, where we are checking if it is above 15, IV is above 15, and Here for long calendar, we want the current week IVs to be more than the next week IV. So for that purpose, we just have to modify this single value and then link these two conditions. And in the action, we'll modify it as we are going to buy next week expiry options, and we are going to sell the current week expiry. So we'll just modify this the expiry number. So once this is done, we are going to click on save, and we have to write the exit values. So there's another thing that you can do. You can also add a comment here saying short calendar, so you get to know that this position was created from a short calendar. For exit condition, we already have this default exit return, which is candle time above 15:15. So instead of using that, we again will have to do the entire calculation again. So I'll just copy this long condition action, and I'll delete this exit condition. And here, whatever we have copied, will rename it as exit condition. And in exit, we are going to mark the condition type as exit. So we wanted to reuse this calculation that we had created earlier, and we'll say this calculation should be below 10. This is one of our exit conditions, if you remember. So if you check here, our exit condition is if IV is below 10%, or we'll exit on 1 DTE. So here I'll add another group and name it as OR, and it should be DTE equal to 1, days to expiry, DTE weekly should be equal to 1, and the candle time should be above 15:15. Wait a minute. So once these two conditions are met, and like if this happens, or this group 2 happens, or there is another condition wherein we reach the open MTM, our positions MTM goes beyond 3500. So we'll write open MTM is above 3500. So either of these three conditions happen, we are going to square off the entire position. So we'll link it to square off. So now we have built this entire strategy, and I'm going to name it as TK calendar, and we'll save this strategy. So once it is saved, we can start the backtest process. Here we have a backtest icon. I'll just start the backtest for 1 year at the moment, and then we'll see how it goes. So 1 year backtest is ready with us, and as you can see that the results look pretty impressive even at a 0.5 slippage. If we remove the slippage altogether, the results are phenomenal, but we need to add the slippage. With 0.5 slippage, you can see that we have 14.2 returns to max drawdown, and but the expectancy is of just 0.16. Let's scroll down, see we have a very minor drawdown here, and there were literally no trades in July. But if we see, so this is just 1 year report. Now we'll start the backtest from 2021, and let's see if the results still stand. And in the trades, if you see that our condition for long calendar and short calendar is being triggered really well, you can obviously play around with the configuration of the strategy and see what works for you. So if you see the results from 2021, they have taken a really bad hit. The strategy did not work up until 24 November. This is with a 0.5 slippage, and we have a very huge drawdown here as well. But remember, the strategy is just for the purpose of showing you how the calendar spread works. You can obviously try some other alternatives. You can modify the configurations. You can even change the entry logic and try out with various IV values and see what works for you. If you can see, like 21, 22, 23, we had a big hit. In 24, here we have a very huge single day loss of 15,000. We can add certain parameters which can help us to remove such type of trades, but we need to do some lot of testing work. So let me know if you'd like me to add any other configurations here, or if you have any other strategy that you would like me to backtest, then surely let me know. And please try build algos. If you have any feedback about the product, we'll try our best to improve it and make it into a better live trading and backtesting engine. So thank you so much for watching this video.